News Hour, Joe and Jason on this Tuesday, the year of chaos. We told you, buckle up. It's going to be days and days and days like these, up, down. Today, it's a major down day. What the hell is this? The gosh darn stinking inflation. It just won't cooperate. The inflation, the CPI numbers came out today, and man, did the markets hate it. The Dow, the debt markets, all down big today. We've got gold down, silver down. The only thing not down, which, again, bad again, is going to be crude oil was up, and the 10-year note, it is more and more like a meme stock, bumping up on 430. If you could believe that. I mean, a couple of weeks ago, what were we? Like 3.8, back to 4.30. We're going to break it all down for you. And then U.S. companies, as earnings season, is starting to come to an end, discussing cost controls. Yes, that's a word. When you hear companies talk cost controls, that really just means one thing, layoffs, record amounts of companies. We've been worried about this. Is the layoffs actually going to come? I've been saying it for years. The only way inflation really goes away is if people lose their jobs. 800-951-0592 is our toll-free number. AllAmericanGold.com is the website. And Jason, it really starts and ends with inflation. Inflation came in much hotter than expected, and it really didn't matter what type of fake inflation data the Fed was using. It hit everywhere.
Yeah, and there is one other way that you could get inflation under control, which just leads to jobs going away anyways. But you can make the jobs go away, just like you said, or you can actually, instead of this little bit of money destruction that the Fed's doing, you just really slash a lot of money out of the system. Of course, then you have the job losses and the inflation goes away. But really, to get rid of inflation, you just shrink the money supply. And the Fed, to their credit, they shrunk it a little bit as far as the money that we know that they're putting out there.
Yeah,
we don't know where the room.
Yeah, we don't know. The headlines tell you they shrank it, right? We don't know what they've been doing behind the scenes. By the way, no movement last week in the emergency bank facility. Man, we should have seen that number drop. It should have been dropping because the Fed was like, hey, you get no reward for using it now. And that number did not drop. The discount window rose again. And right now, this move in the 10-year note, that is going to throw hundreds of banks into turmoil on the loan side. We know about commercial real estate. You're talking about commercial real estate, a collapse that we've never seen before. Another office building, this thing was like 260,000 square feet. It sold for $9 a foot. And I just want to give you perspective because I was like, well, what would that mean if my building went to $9 a foot? That would put my building at $25,000. One of the suites next to mine just sold for $800,000 not too long ago. Jason, that's how cheap $9 a foot is. I mean, none of this is good news. This is why you're seeing such a big drop in Wall Street because everybody was on the same bus, and we've been warning about that. And get used to it. This is what 2024 is going to look like.
Are those units actually selling, Joe? Are they for sale? Are they actually being moved? Because, we talk about commercial problems. Arizona's growing, but I just didn't know.
Yeah, well, this is, you got to remember. So office buildings, nobody wants them. You can't give them away. There was an office building here. I mean, it was a nice-looking building. They tore it all down. so they could build apartments. I mean, they just tore it, whoever bought it, who knows what it went for, but they tore it all down. You know, I've got like a flex space. This is more like, hey, you're a small business owner. We got the office in the front, and then you can park all your toys in the back and all that stuff, right? So a little different, but it's going to be interesting if on the commercial side of it, right now, here's the things that aren't doing well commercial office buildings, obviously, first and foremost. Malls, that is another tough one. And then, of course, things that we learned, and we're always learning here, a lot of what the banks did last year, because, you know, we were expecting more bank closures at the end of last year, because I was like, hey, this problem hadn't gone away. They pulled a little trick. The banks and the lenders, they did we'll just extend it into next year. They gave extensions. Thinking the thought process was, Jason, hey, the Fed's going to be lowering rates, the 10-year note's going to go down, and it won't be as bad. It's actually gotten worse, and now the latest numbers say $1 trillion is now going to come due, and they're saying this time around there are no extensions, right? That game, that was kind of a one-trick pony, kind of like the Fed's bailout facility for banks.
Yeah, I think we mentioned it last year, too. I think the loans coming due the next 4 years are severe. So this year, next year, 2026, 2027, there's a lot of these loans coming due. There's a drop-off till 2027 or 8. So this is going to be a recurring problem, Joe.
Yeah, when we get back, how hot was the inflation data? And what type of cost controls and what type of companies are saying cost controls? 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. Quick look in at the markets as a red-hot CPI taking the wind out of the sails here. The Dow down 450 right now. The S&P down 55, back below 5,000. The NASDAQ down almost 200 points. The 10-year note, 428. Crude oil, defying everything, up 66 cents, 78.58. Brent crude, 82.57. And I got news for you. Crude oil's going higher as we get to drive season, and diesel fuel especially. On the currency side, the Japanese yen, it's back. They haven't fixed anything. Back above 150, right? This is the territory that we talked about in the past. Extremely worrisome. And remember, Japanese banks saying they're getting caught up in the whole commercial real estate blow up. Gold's down 23, silver's down 60 cents. Even crypto not immune, down 1,500 this morning. And again, diversification is going to be the key. This is going to be the year of chaos. We're going to see great weeks. We're going to see terrible weeks. We're going to see everything in between. Something where, hey, you know what? I'm gonna sit the madness out, or I'm going to take part of my portfolio and know exactly what I'm going to get. Why refi? Up to 10.25%. Fixed rates of return, not correlated to Wall Street. Not correlated to Wall Street. Fixed rate, what does that mean? Doesn't change. Doesn't care. What if inflation comes in red hot? Doesn't matter. Right? What if it came in, right? It was too cold, right? It wasn't hot, it was cold. Doesn't matter. Even if inflation was just right, it doesn't matter. It never changes. You know what you're going to get every single month. You can turn your income on, you can turn it off, you can compound it. There's no fees. Well, what if I need my money back? You get your entire principal back. And guess what? They even let you keep some of the interest. Nobody does that. Check them out, investyrefy.com. That's the word invest, the letter Y, REFY.com. Or just make it easy. Call them. 888-YREFI. 24. And as you guys know, you need at least $50,000. You can use existing IRAs. Some of you can use your 401ks. Obviously, the money in your bank, whatever it is, check it out. But Jason, really, I guess we've got to start focusing on the CPI. Expectations were for a big drop. Instead, it was a surprise to the upside. A 3.1% print year over year. So the sub-3 did not last very long. Consumer prices up 0.3 month over month. They also went on to say that core CPI, that was at 3.86. So let's round it up, 3.9. That was much hotter than the 3.7 expected. Prices in the core up 0.4%. What made it even worse, the Fed had just created another new number. They called it the super core. Yes, if we just take out food, energy, and shelter, right? If we just got rid of those, then inflation may be better. Right? That was their line. Again, because they want to think about this. Can any of us live without food, energy, and shelter? Right? So essentially, for the homeless people, if inflation would get better, life would just be wonderful, and everything would be perfect. Unfortunately, even that number, that one was the worst number in the group. The so-called supercore rose 0.7%, the biggest jump since September of 2022. The year-over-year change on the supercore up 4.4%. So way above what the Federal Reserve was talking about with their 2%. Car insurance, the only thing really down, used cars. Everything else, motor vehicle insurance up, index rose for communications, personal care, airfare, education, medical expenses, hospital services. The list just went on and on. Like I said, the only real big decrease, Jason, was a used vehicle, which, again, those prices, they're up like 100% in the last 3 years, so a little bit of fallback there, but that was about it.
Wow, that sounds really bad. The year-over-year number was not so high. It was 3.1, so it was okay, right? It's the lowest number they've had in 3 years, tied for it. I wonder why they didn't lead with that one, because I don't think they want to lower the rates, because inflation.
Well,
right?
Let's face it. This was supposed to be the month that it flashed a 2, and then it didn't. And then when, unfortunately, the core and the super core got much hotter, right? That was really kind of the thing that really messed them up, which tells me now tomorrow we get PPI. It's going to be interesting to see what the guys that make stuff say, because that should be a good indicator. And again, inflation isn't going anywhere. Jason and I have been saying this for a while. The question now is, does it flatten out here? What if it gets hotter again next month? What do they do then, right? You even had some people's, and they're in the minority. Let's be fair. These people are in the minority. But some people were saying, what if they got to raise rates again? Could that be possible?
Well, I'm wondering if this is their soft landing they've been talking about. I mean, when you look at the CPI, going back to, I think, June or July of last year, it's stabilized in the threes. It's 3, 3.2, 3.7, 3.7, 3.2, 3.1, 3.4, and 3.1. Remember how we said there was going to be a normalization of a higher inflation, Joe? This might be the soft landing, and this is not what people want. So about the time that they get angry that things are still inflated at the level they're at, that's when the big market crash comes and the war and all the craziness. And they'll say, hey, we'll get this under control. We're just going to have to deal with 3.5% year-over-year inflation, always. I mean, this is how Argentina started, decades and decades ago. It just got a little worse. Then it just got a little worse, right, Joe? And until you had hyperinflation. So you've said for a long time, and I think this is true, is that they're going to have a higher target number, even though they keep saying 2, right? The Fed keeps saying 2, keeps saying 2. It just takes a big worldwide emergency to adjust that, right?
Yeah, and it's something where as we start to look into this, Morgan Stanley, talking about the transcripts from the companies in earnings season, something that's never happened before. Talking about operational efficiencies. Morgan Stanley put this chart out. Now, I know it's radio, so you're going to have to take my word on this. It was almost 100% of companies talking about operational efficiencies, layoffs, things of this nature. The group's wide breadth in the market: software, professional services, healthcare, financial services, retail, Pfizer, BlackRock, Lam Research, all of these, Walt Disney, Hertz. I mean, Jason, it really was the entire market breadth, never before. And when you talk, listen, companies always like to talk operational efficiency, but this number is normally in that 50 to 60%, right? That's kind of the normal thing. This one, almost every company, more than 9 out of every 10 companies is now talking about that. A lot of talk about AI, right? And people have been talking about AI for a while now. Is that going to eliminate all these jobs and all that stuff? But, Jason, it does seem to be a bad day as far as data for people expecting rate cuts to happen. I think right now it's going to be a while for sure. And now with the yield surging, these banks are going to come back into the periphery here. There's now talk of 300 banks are now going to be having trouble between now and the summer.
Yeah, Joe, it looks bad. I mean, I was just thinking as you're talking about the amount of businesses that are going to be gone, and I wouldn't be too surprised by 2030 if banking as a whole is completely changed and completely gone. Well, how we see banking today, 2024, may be completely opposite in 2030. I was thinking, Joe, about the lower standard of living, how every decade just gets worse and worse, right? I always watch Jack and his friends, right? You know, going out. And I don't know, your kids are a little bit older, your sons are a little bit older. But it's like, what do they do? What we used to do on a Friday or Saturday? There was the arcades, there was the cool movie theaters, the dollar movies, there was the indoor malls, there was all these cool things to go do, laser tag. Kids nowadays, they don't have anything to do. And that's not because there ain't stuff to do. It's because it's not profitable to have fun places. Recreation has become too expensive. And now you're talking about regular small businesses are getting expensive. Banking is too expensive. I'm telling you right now, the digital world that's about to hit us in the next 5 years is going to change everything. Banking might be completely gone. I mean, it's possible. I'm not saying it's going to happen, but it's very likely. That's one thing you can trim a lot of cost away from businesses if you just give it all over to the Fed. But by the way, who owns the Fed is the big banks. J.P. Morgan doesn't care if J.P. Morgan goes away as long as they get their share of the Fed coin. So Joe, yeah, we're looking at a massively changing world right in front of our eyes.
Yeah, the National Bureau of Economic Research now saying over 50% of all office loans are underwater. And my guess is it's bigger than that. They're just not there yet. The report also cautioned 300 regional banks will face solvency runs due to the turmoil in commercial real estate before the end of the third quarter. Now, here's the problem, because that's not the only problem now. right? It's one thing, okay, we got exposure to commercial real estate, and of course these 300 banks they're talking about, they're talking about these banks that probably have large exposure to that space, that commercial office space. But now all of a sudden, Jason, how many more banks are going to be looped in where, hey, I've got exposure there, but I had exposure in credit cards. I had exposure in auto loans, right? I was a little more diversified in my exposure. Now, all of a sudden, those loans are having trouble. And if these companies follow through with what they were talking about in earnings seasons here in Q1, all of a sudden now, Jason, you got a full-blown financial crisis, don't you? Because it's now it's one thing if it's just banks with heavy exposure to commercial real estate, but how about these banks that, well, I've got decent exposure there, and I got decent exposure to credit cards, and I got decent exposure to auto loans, and now all of them starting to have trouble. Again, the setup here is not good, and the higher the rates go, right, the worse it is, right? They got a little reprieve. Remember they got the 10-year note below 4% and promised us inflation was going away. And at least for this month, Jason, the exact opposite happened. And I'm looking at energy because here's what I'm seeing. I'm seeing crude oil probably going up another $10 a barrel between now and April. And already inventory levels are super low again. Diesel especially. That really is energy. Let's say you can say you don't count it, but I don't care what you say. It counts, right? Patriot Radio News Hour. We're back with an amazing opportunity right after the break. Right after the break. We're back here, the Patriot Radio News Hour. Joe and Jason on this Wednesday, on this Tuesday, right? Inflation Tuesday, a great opportunity for everybody out there. We're going to go slow here because I've got something, hopefully for everybody, but some really, really cool items. $20 gold pieces. I have 20 of them at $21.25. You heard me right. $21.25. You can buy those one at a time, but I only have 20. I have a roll of 20 1904 Liberties. So think about this. These coins are all, 120 years old. Every one of them, a whole roll, every one of them is a 1904. That's one of what we call the common date in the Liberty series, 1904. I'm going to put this thing red hot here. You got to buy the entire roll, $2,100. Right now, gold's down 1995, so $105 over spot. That's ridiculous. But for that,
and just on those two, Joe, just on those two that you've offered, 2125 and 2100. That's the cheapest 20s we've had in months and months. Just on so we have several items. Months
years,
and months,
baby. Right, going back to COVID, probably. I'm pretty confident of that, and there may have been a day here or there, but this roll of 20 1904s, 42,000. I have one roll of 20. They're all Saints, so I know a lot of you like those Saints out there. Got to buy the roll. You get $20 Saints at $21.25 or $42,500. I have a roll of 20 pre-1900 Liberties. So in this roll, every coin will be in the 1800s. From 1877 to 1899, there's 20 of them in that roll. Also, 2125, you got to buy the entire roll. I have one of those rolls at 42,500. I have 2 rolls of 20. These are also pre-$1,900 $20 liberties. But in each of these 2 rolls, you will get 5 of what we call the 20D coins. So 1876 and older. They didn't spell the word dollars out. They just said 20D. You'll get 5 of those, 5 of these, all of them will be pre-1900. You'll get 5 of these 20Ds in your roll. One of the 5 will be a coin from the 1850s, in the early part of the 1850s. So in those 2, I've got 2 of those rolls, so I can do that twice. Very rarely, I can count on one hand how many times I've seen a coin from the 1850s. I mean, you're talking, right, almost 175 years ago. The coins for this one, a little more expensive, not much, $2,135 a coin, $42,700 on those 2 rolls. If you want to buy both rolls, go for it. And then last but not least, I have a date set. It's got 8 coins in it. Each coin is going to be $2,125, and these are also liberties. 1900, 1901, 1902, 1903, 1904, 1905, 1906, and the last date of the series, the 1907. So you're going to get an 8-coin date set. That set, Jason, $2,125 a coin, or $17,000. So again, $2,125 if you want to buy a $20 gold piece, one by one. I've got a roll of the 1904s all the way down to $2,100. 1904 $20 liberties at $42,000. You can get rolls of $1900 $20 liberties, $2,125 a coin or $2,135 a coin, depending on if you want the 20Ds or not. There's not a coin in there. Think about this. There's not a $20 gold piece in there for more than $2,135 today.
You know, from 2 centuries ago. Wait a minute. Yeah, 2 centuries ago. There you go, 2 centuries ago. But yeah, I mean, the date set, which is 1900 to 1900, those are the last 8 years of the $20 Liberty before they switched to the St. Gaudens. So you get the last 8 years of that run. If you wanted some different dates, we know we have customers that like several dates. We don't do this very often, so if you guys are looking for different dates, this is the day to buy. And then, the 20Ds, one of the reasons the 20Ds are a little lower mintage, well, that was after the Civil War. You know, after the Civil War, we had this debt. You know, they were trying to push us back into trying to get another central bank going. And with Reconstruction, there was not as much money for the Treasury to be minting tons of gold coins. So that's why the 20Ds were a little lower mintage. And, Joe, of course, the 1850s coins, that's just, you know, coins just don't last that long normally. Even gold coins just don't last that long in circulation. They just get melted down and turned into a new coin. So it's cool if you're wanting to buy a roll of gold, which I know there's not a huge number of you guys out there, but we know our guys. We know that there's guys out there that would appreciate this. But just to be a reminder, you have single coins, right, Joe, that you can buy for $2,125 today. So you're not out of this thing. You just want to get one $20 gold piece at one of our lowest prices, Joe, say in maybe a year. I think maybe there was a dip sometime in 2022 where we may have been at this price. But essentially, this is the cheapest gold we've had in a while, and you can take advantage, right, Joe? Just take advantage. Give us a call, right?
Yep, 800-951-0592. I was just looking at these 20Ds. There's only 1 year from 1849 all the way to 1876 where they even minted 2 million. Most years they didn't even mint a million of these things. So these are really super cool. Everybody else, they charge fortunes for this stuff. Not here. That's not how we operate. 800-951-0592. Patriot Radio News Hour. Joe and Jason will be back after the break. $800-951-0592. The headline reads, "Are bank runs back on the menu?" Marty Bent talking about, Silicon Valley and First Region and Signature Bank. Those were the three that went under the last time. We've had a few smaller banks close, and now it's back in the forefront, especially with the 10-year note ticking back up. But banks who have material commercial real estate exposure on a tough ride. And it seems like the dominoes are beginning to fall, with New York Community Bank leading the way. I expect this crisis to unravel rather quickly as we get closer to spring. So we had the National Economic Research, right? Again, here comes this March thing again, right? We so many things converging in March, and this economic research saying, hey, by the end of the third quarter, we've got a problem. But this thing, and again, it happens quickly. Right, we know this. Remember Jay Powell, his comments on 60 Minutes. He said it very plainly. People wanted to look past that comment, right? They focused in on inflation and rate cuts, but he just flat out said it. Banks are going to go out of business, and they're going to be merged out of business. Both of them are going to happen, but people are starting to really get concerned about what they're seeing. One of the experts in here, Jason, saying this thing's a Category 5 hurricane that's getting ready to come to the banking industry, and without these rate cuts, there's going to be a big problem here, and it's going to be interesting how all of this shakes out, as we talked about. How about government debt? The move in interest rates here, right? We just had to spend another $120 billion that we didn't have outside of the second quarter. All the other quarters, because obviously you got April 15th in that second quarter. All these other quarters, Jason, we're looking at borrowing levels that we've never really seen outside of COVID. And a couple of these quarters matched what we saw during COVID.
Correct. I like the way you brought up merged banks, too, because, you don't really hear too much about that, do you, Joe? Because that's a bank failure most of the time. Of course, there's profitability. Two banks don't want to profit, but we had mentioned about a segment ago, we were talking about, the reaction to the hot inflation numbers, and, making it that there's not going to be a rate cut in May. We kept talking about March, right, Joe? We kept talking about March. What if these same inflation numbers or worse happen in March, right? Right? We kept talking about March. Well, they get the same thing going on in February today, next month, right, Joe? What's going to happen to the markets then? They're going to have a tantrum, right? They'll probably they'll sell off just to force the issue of rate cuts back, right, Joe? Can you imagine? There's big players in the markets. If they want rates to go down, they can sell a lot of stuff, and push the idea that we need rate cuts, even in the midst of inflation. Can you imagine, right? March is going to be rocky, Joe.
$28 billion in government-backed mortgages. Fannie, Freddie, FHA, Ginnie. These are mostly multifamily and healthcare buildings. $59 billion held by life insurance companies. 440. Well, this is just debt coming due in commercial. $441 billion billion, the biggest amount by far, held by banks, including foreign banks around the world, right? We know this. We've been talking about this. That did not say which portion was held by U.S. banks and what was held by foreign banks. But again, $441 billion coming due, $234 billion in commercial-backed mortgage securities, collateralized loan obligations, right? All these words that we learned from the financial crisis, and other asset-backed securities, $168 billion held by other credit companies of all types, including mortgage REITs, PE firms, and private credit providers. And you got to remember, they had rates at zero for so long, you couldn't make any money buying bonds. How many investors, regular investors, hey, they got a better rate of return? How many of them jumped into these, Jason, 5 years ago, 7 years ago, because they wanted a better rate of return than they could get by buying U.S. Treasuries? I bet there's going to be a lot of exposure for regular investors as well.
Yeah, how many of them were signing when in the midst of transitory? How many of them were like, yeah, there's not going to be inflation? How many of them were signing on the dotted line when they were hearing no inflation, and transitory? Right, Joe? It's almost like a trick, isn't it? Hey, I wonder how many of these suckers will sign these bad loans, because the Fed knew they were going to raise rates. They had the numbers way ahead of time. They knew I think they knew, Joe. I don't think that they thought that the inflation wasn't going to happen. I think they knew. They printed up half of all the money in circulation in 1 year in 2020. I think even a Fed guy knows what happens if you do such a thing. So yeah, those loans you're talking about, Joe, how many of them were signed in the year plus of there's not going to be inflation, and then it's just transitory? It's almost like, look, I just want to take your money from you. Get a loan, and I know what's going to happen to you in 2023 and 2024, 2025.
Yeah, those are all great points, right? All great points. A great opportunity on $20 gold pieces, $2,125. We've got a roll of 20 of the 1904s all the way down at $2,100, right? You got to buy that roll at $42,000. We've got a date set from 1900 through 1907. Every coin, 01, 02, 03, 04, 05, 06, 07, at $17,000. 800-951. 800-951-0592. Joe and Jason, the super core came in on fire. I think the last hour of trading is going to be interesting. Right now, the Dow still, down 440. The S&P's gotten a little worse here, down 56. The Nasdaq's down 211. I think it's going to be interesting how this market moves here. Right now, gold at $19.95. Here's what's interesting. So I've got this great deal on 20. Man, don't let it go by. Wholesale gold prices for the physical markets. Gold's down. You remember, gold was down yesterday. Prices didn't move. Gold's down $23 right now. In the last 2 days, gold's down a little over $30. Wholesale gold prices only went down $10. A regular, normal price, if I didn't have these from some estates that we're dealing with, you'd be talking $2,195. So picking up a 20, at $21.25 as an example, right? You're saving $70. You buy that roll of 1904s, right? You're saving $95 a coin. So again, I've got 20 individual 20s that you can buy for $21.25. I've got this roll of 20 1904 $20 Liberties. Each one of the coins there, $2,100. You've got to buy the roll. The roll is $42,000. I have a roll of St. Gaudens. Every coin in there is a saint. $2,125. The roll, you got to buy the roll, all 20 of them, $42,000, $500. I've got a roll of 20 pre-1900. This roll will be $18.77 to $18.99. Every coin in it. $2,125, that roll. You got to buy the roll, $42,500. My favorite. I've got 2 rolls of 20. Again, these are all pre-1900 Liberties. This roll, these 2 rolls will have 5 coins, 1876 or older, which is when they didn't spell out the word dollar. We call it the 20D. One of those 5 will be a coin from the 1850s, and they look really nice. I'm just telling you, they look really nice. Those rolls, $10 more, $21.35, $42,700. And then I've got the date set, the 8-coin date set, the $20 Liberty date set, 1900, 01, 02, 03, 04, 05, 06, 07. So all 8 coins there at $21.25 a coin. That one is $17,000. So we got something for everybody at 800-951-0592. And for me, I'm going, Jason, I'm going for those pre-1900 coins because those are the ones, there's a lot less of those than there are anything else, and especially the ones with the 20Ds.
Yeah, the 1904 is pretty good, too, at $1,900 each.
Yeah, that's you're right. That's a great value. There's no doubt about it. 800-951-0592. Buy them all if you want. Jason and I, we're coming right back with the Half Empty Cup.